Welcome everyone. We're here today. I'm Iain Smith, CEO of Springfield Properties. This is Iain Logan, CFO. We're here today to present the interim results for the 6 months ended 30th November 2024. Now, normally the focus would be on we've increased the profit in the 6-month period from 2 to 3.8. We've got the debt down from 93 to 63. We've got the margin from 14% to 17%. But clearly, we've had a very large transaction post-period, which involves selling some £64 million worth of land to Barratt Redrow. And that's going to accelerate the debt removal, which has been a target for the last 2-3 years, and will get us to a net cash positive position by FY27, and will give us an opportunity to capitalise on a significant opportunity in the north of Scotland. Obviously, profit will be ahead of 2025 of the market expectations as a result of this transaction. So accelerating the removal of debt, we have, over the last 3 years, we have sold land, and we have talked about the target was to reduce debt, and we got in a discussion with Barratt Redrow, and we saw the potential for selling significant amounts of future land, which would clear our debt in total over the next 2 to 3 years and get us in a net cash position. The deal was for 64 million. The cash will be received over 4 years with approximately 50% in the current financial year. And then we have further non-binding discussions underway regarding sales of future land holdings on a number of sites. The land primarily is in central Scotland, although there is on one of our larger sites in Inverness, 130 plots that are part of this sale. The benefit to us, I've already stated, it will remove the bank debt by financial year 2027. The profit will be ahead of market expectations. We are realising what we believe our land asset in Central Belt, where there's huge competition, we are realising the value for that, and that gives us the funds to effectively clear the debt and invest in the north. And you know, the plan is to there is a call for sites, which we'll talk about later. The plan is to add to our land bank with this cash. Springfield will continue to have a large, high-quality land bank with 7,800 owned and contracted plots, with intention for further growth in the north of Scotland. So the significant opportunity in the north of Scotland, just to take you back a period, around about 1.5 years ago, the free ports were announced, and the free ports are basically 4 ports in the north of Scotland, which is the Nig, Cromarty, Inverness, and Ardersier. And these free ports, they get customs breaks, they get rates breaks, they get national insurance breaks, all sorts of breaks that encourage investment. Now, obviously, the investment in the north is to do with the offshore wind potential, and all of the wind is offshore in the north of Scotland. So we went along and we understood, you know, from the Green Freeport that there was going to be 5,000 to 10,000 jobs created over the next 5 to 10 years. Just for example, we went out to the sites and we saw at Nig, Sumitomo Electric, they were building a £350 million factory. They have just secured their first contract, I believe, to Shetland to supply the cable to that. And we went out to Ardersier, some 350 acres, and that's a new port. They're spending something like 350 million through Aventus. And Cerulean Winds have picked Ardersier as a deployment port for their triple floating wind project. They are also, at the moment, from what I understand, Ardersier are looking to expand by 100 acres. They've got a planning application in just now, so clearly ambitious plans there. In addition to this, we are aware of, I think it's six hydro schemes that planning is in for just now in the north of Scotland. Each one of them will need significant amounts of jobs. What also happened over the last year is we then discovered the SSEN, Scottish and Southern Electric Networks, are basically investing 31 billion in Scotland, 31 billion, that's about the same as HS2, into upgrading the electricity network, and some 20 billion of that will be in the north of Scotland. And effectively what happens is that all of the pylons that you see at 275 need to be upgraded to 400 kV. The new substations need to be put in along the lines, and the initial contract is a line from Bewley to Peterhead. And clearly, if all of the wind is getting generated in the north of Scotland, it needs to make its way across the nation, and that involves going across to Aberdeen, you know, down to Dundee, and eventually making its way to England. The increase in capacity for wind generation is going from some 10 gigabytes up to 30 gigabytes over the next 10, 15 years. And that, at the moment, Scotland has I think Scotland uses about 5 gigabytes, generates 10, but only 8 can actually be transmitted. So in order to get the transition, you need the transmission. So that is what is happening there. But that became very clear quickly. The contractors working for SSE are Balfour Beatty, BAM Nuttall, Murphy, a number of contractors. And they're going to need about 5,000 workers over the next 5-year period to implement these new pylons. Just for example, between Bewley and Peterhead, I think there's 3,000 pylons need replaced. All of them need site investigations, need roads built to them, need scaffolding, need bridges to get there. The activity is just massive. So all of these workers, because of the remoteness of the Highlands, are required to move up to the area, and we need to find accommodation for them. Now, what has happened since was we had a year ago, we had a new local plan, which allocates housing in the Highlands, and it allocated 8,000 houses, which was clearly not enough. So the Scottish Government has since introduced master plan consent areas, which means the council can actually identify things not in the local plan and can streamline and fast track it through the planning process to get more houses. But Highland Council actually commissioned a report, and just a quote there from the Housing and Property Committee of the chair of the Housing and Property Committee of the Highland Council. The challenge is to double our current housing supply and accelerate the delivery of both public and private housing and availability of sites across Highland. So they are targeting delivery of 24,000 homes over the next 10 years. Clearly, that's a massive increase. Now, because of our presence in the area, and we go to the next page, Springfield is very well positioned to promote land and to take positions. The other good thing about this area is that we're uniquely placed in this area. 23% of our staff are apprentices. We've got strong subcontract chains. The last month I've met with the chief of Highland Council, the chief of Moray Council. We know all of the planners by name. We know all of the landowners, and we have very good connections there. And the other advantage about the north of Scotland is because you've got this call for sites going from 8,000 to 24,000. It's almost like an open goal to go and get land submitted. So whilst we're selling land in the Central Belt, which is extremely difficult to get planning on, and we believe we're selling it at a good price at a good time, we're actually going up to the north where there's a bit of an easier planning access. And the other thing is, the national house builders tend to be focused in the Central Belt. Only Barratt really go up to the north. None of the Persimmon, Cala, Bellway, Taylor Wimpey, Miller are actually operating in the Highlands. So for us, it's realise the value from our assets in Central Belt and reinvest in the north and gain a strong position. As I say, we're a historic and respected shareholder in the area, and we already know. Now, we have had significant discussions with Balfour Beatty, BAM Nuttall, SSE over how we can assist in housing the people in the area. We are looking potentially in the Highland area of identifying sites, and we've identified sites and a number of houses, and potentially looking at doing a joint venture with a couple of partners, probably clearly Highland Council would be one, and the Scottish National Investment Bank would be the other. And the potential there is that the Highland Council would invest in it, and it would get additional affordable houses, so there would be a legacy left behind. We would get the development value for the houses, and obviously SSE would get the workers. SSE are very clear that they want to leave a legacy because they recognise this influx of people. There isn't the hotel space, there isn't the rental market, but what they don't want to be doing, and what Highland Council doesn't want to see, is house prices pushed up and no rental properties for locals, no affordable houses get built, and just huge pressure on local areas. So they're well aware of the impact to the community, and they've committed to contribute to 1,000 new homes. That's SSEN as part of this project. Going over to the right, we have Moray, and at Moray, the proposal there is that Moray has a good land holding of affordable housing, which we obviously have sites that are included in this. And their proposal is that SSE basically give Moray Council a grant, Moray Council hire or rent the houses back to SSE, and after 5 years, because SSE, it's a 5-year project, would be looking at guaranteeing the rent for 5 years. After 5 years, then Moray Council would take on the affordable housing. We would obviously get the build and the development, and it would basically accelerate affordable housing. And that's a similar discussion we're having in Aberdeenshire. So we have spoken, over the last number of months. I've been in Holyrood. I've met with Deputy First Minister. We've met with a number of finance operations. I won't name them, in the public. It's all of the obvious people that you would expect to speak to who are interested. And the PRS changes, we're getting the rent cap removed at the end of March. And that kind of opens things up because the new housing bill gives exemptions to private rent supply. So lots of opportunities. We've also spoken to entrepreneurs, and entrepreneurs are interested in taking some of our stock and just renting it out directly themselves. So the opportunities are great there. And it seems like our business plan is, we spoke last year and I would have spoken about this, and the business plan really has written itself. We've got new, the NPF4, which has just led to very difficult to get planning in Central. So our strategic land bank that we've kind of built up there over the years, is at a good price just now. In fact, when we look at what we've sold over the last 4 years, last year we sold 28 million of land. Prior to that, the 2-3 years, I think it was 23 million. So that gets us to 51. We've sold 69 this year. So that's 120 million we've sold around about 1.2, 1.3 times book value. So I think the evidence is there that our land bank is value, and our net asset value is genuine. 120 million sales. I don't know what evidence we need, although that's clearly not reflected in our share price. But we do believe, and we've listened to investors, that taking the debt out, and it's important to note that when we take this debt out, Iain, there's still 23 million of land expenditure over the next 2 years, is a very strong message to our investors and to our market. We're still left with a significant land bank, some 7,800 owned contracted plots, but all of the future ones coming through in the future local plan in the north. That gives us 4,700 across the north of Scotland and 3,000 in central Scotland, some of which we're in discussions with going forward. We will still have significant build over the next 2 years in Central Belt. We still have affordable contracts to pick up. We still, Dundee and Barratt Park, we will be there for many years, our village sites. So that we'll still have a presence there, albeit the focus and investment will be in the north of Scotland. So, going on. Iain.
Thanks, Dennis. Morning, everyone. I'm pleased to report for the 6-month period to 30 November 2024, we've increased our profits and reduced our bank debt versus the prior 6-month period. If you look at revenue, we were 106 million versus 121 million. The reason for the reduction in revenue was in private housing, where we opened the year with a slightly smaller order book. In terms of gross margin, that's increased from 14.7% to 17.7%. The reason for the increase is in affordable housing, where our margins have returned to double digits following completion of legacy contracts. We've also got land sales in the period which have improved the margin. In terms of administration expenses, we continue to review these, and we've made further savings in the period. Our operating profit before exceptional items has increased from 5.6 million to 6.4 million. And one of our key measures, profit before tax and exceptional items, has increased from 2 million to 3.8 million. In terms of our bank debt, that in the period is 63 million versus 93 million in the prior period. And slide number 9 is the breakdown of each of the segments. So in private housing, I've mentioned that we've got lower completions in the period, and that is due to the fact that we've got the lower order book that we said. Our average selling price has been maintained at 313k versus the prior year period, and our pricing across all our brands is holding up well. In terms of affordable housing, our revenue is slightly behind where we were expecting to be, and this is due to uncertainty among some affordable housing providers on access to funding. The positive for us is that the government have approved the Scottish budget in December, and that will mean that from April onwards there's increased funding for affordable housing. Also, the average selling price on affordable, as you can see, has increased. That's a result of the Scottish Government grant per home, which has increased. Contract housing is our site at Barratt Park in Perth, and the revenue there has increased from 2 million to 6 million as a result of a new private phase starting at Barratt Park. If we go on to the next slide. So what we can see here, we've talked a lot about our bank debt. If you take the period from November 23 to November 24, you can see there's been a reduction from 93 million to 63 million. In terms of the inflows, the two main contributors that you can see are the land sales, which we completed at the end of last financial year, and the ongoing operating profit of the group. In terms of the main outflows, you've got £12 million of land purchases. 9 million of that was in the current 6-month period, which is a real positive, and it represents the confidence within the group that we're returning to purchasing land. The other outflow of significance is tax and interest paid of 8.1 million. So overall, that slide's positive for us, and it continues the strategic aim of bringing down debt. Next slide, Rich. This is the shape of the balance sheet, again, driven by the reduction in the bank debt. Other liabilities have increased slightly as a function of the fact that we've got a higher land creditor. This was a result of a transaction we completed in October last year. We were able to secure additional land on favourable terms. And the next slide, Rich. This graphic shows how the net asset value of the group has grown since the listing. You can see some of the key bullets on the right-hand side. One of them is the annual growth rate. So the growth rate in net assets per year is 16% since listing. We've obviously paid dividends of £23 million in that period. And the last bullet, really, net assets in total have grown from 57 million to 157 million at May 24.
And I think just reiterating that, looking at our land bank again, we continue to grow the net asset value of Springfield year on year through I think the last 7 years have been quite turbulent times. But this value, this transaction that we're doing again, it's realising value. I think what is a good time in the central belt when there's heavy competition for sites, and it allows us to have a lot of firepower, clear the debt for going up the north before. And I do believe that as we're taking a very reasoned and considered view as to the growth potential for the north, and we're investing now and putting our money where our beliefs are and where the evidence is pointing. It's like an offensive defensive move, if you like, and we think we can realise great value in the land bank just now and get good value going forward. Post completion, we refer back to the 7,800 plots and the split between owned, contracted, and the percentage with planning, which is obviously a significantly high number. Operational review. Iain touched page 15. Iain touched on we've seen Labour got in, I think, in June, and we were expecting a bit of a honeymoon, and that lasted for a very short period, I think it's fair to say. And it has been slow and a subdued economy, and not really a great upturn. I think the signs going forward, we did see sales over December, as Iain mentioned, slow, and we're going to be slightly behind on the sales figures for this year. Albeit the last 3 weeks we've seen strong reservations, but we don't think 3 weeks are really enough to forecast forward. We are seeing, from other house builders, positive vibes about the reservation rate. So hopefully that will continue. We've obviously been extremely busy in the last 2 months as well, working on the Barratt Redrow deal. That was signed pretty much late December. So it's been a hard effort by the whole management team to get this across the line for the 17th of February. We are seeing sales prices holding up. We've got the new product coming through, but since since November, we've obviously seen the interest reduction. We saw the vote 7-2 voting for further reduction. I think it's now we're 2.5 years, and in that 2.5 years, a significant number of people have came out of their fixed rate mortgages. I think the paradigm has shifted, and people have had enough time to get used to interest rates. I'm ever the optimist, but I do believe that we're not going to go back to we all went down by about 1/3 in our sales. I don't think we'll go back to those figures, but I do think there's reason for optimism and reason to think there's a pickup. We have a housing crisis that's been declared in Scotland. There is a need for homes. There is a need for housing. And I do think there is potential for a pickup on what we're doing on our privates. Clearly in the north, with the increase in the influx of jobs there, then that's almost anti-cyclical, and will do what it's doing despite what the economy is doing. The other important fact with private houses is when we look at one of the measures people use is the salary to sales price. And in England, you're at 8.6. In Scotland overall, we're at 5.6. And I think in the north of Scotland, we're going to be lower than the 5.6. And what that shows is that there is a proven benchmark of 8.6. So there is potential for Scottish house prices to go further north. So that's in both ways, go further north. Apologies for the pun. Affordable housing. Next slide, please. So we've seen a significant improvement in the gross margin. We've spoke previously about the difficulties we had with long-term contracts and fixed sales prices and rising costs. Those have now gone, so the rate's gone from 3% to almost 15% on the margin, so that's good. The problem we had with affordable this year is that contracts we expected to be signed were delayed because Scottish Government had slashed the budget for affordable housing. You can see a picture there of me within it with John Swinney. It's not to kind of show off or boast. I've also met Kate Forbes on one of our sites, and we actually met Kate Forbes in Holyrood. And I genuinely believe from the conversation with them, they are very strongly focused on getting the business back, getting the economy and getting housing. They see housing as one of the key strategies to move the economy. Now, what happened in December, despite we obviously had about, I mentioned 15 million delays to affordable contracts. We've now signed 2-3 contracts because the funding was reinstated. In fact, it was reinstated to a higher figure in December. And the commitment to get affordable housing moving again remains strong. We also have the removal of the rent cap, and that's coming in March 2025. And we have the housing bill coming through, which will have exemptions for private rented. So the chronic undersupply of affordable housing in Scotland is a key issue for government. They are committed to resolving that, and we have good land bank holdings to take advantage of that. So we won't catch up the whole 15 million this year, clearly, and that's kind of behind the results. But there's no reason to be concerned for next year. Housing market in Scotland. I've probably covered this on all of the earlier slides. Mortgage lenders now offering products below 4%. One of the things I didn't mention again about the green free ports is one of the tax breaks that the tenants get is not to pay business rates, and business rates normally get paid to central government. But what's happening is there's a 5-year holiday, but any rates that would have been paid to central government are actually getting paid to the green free port, and there's a fund being set up. And then once rates do start, all of the money, instead of going to central government, will go into this fund. Economists, and this is from Highland Council, are expecting that fund to grow into hundreds of millions, and that can be reinvested in housing and infrastructure. So that's another thing that will, a fund that will help boost housing and boost the economy in the north. Moving on to the next slide, ESG. As you can see, we build our houses with timber frames, 100% sustainable, 100% of our houses, and that's an air source heat pump that all of our houses are built without fossil fuels as the energy provider. One of the good things happened with air source was the dropping of the mandatory implementation in England, which means that the supply chain is going to get a chance to catch up. So we've been, I think with 60 sites, we've had these air source heat pumps. We know what we're doing. We're going to have to focus very heavily on the north with apprenticeships and training people and making sure that we've got the skills to meet the demand that's coming. We've got a good track record of doing that, and we will continue to do that. But as I say, the ESG, we get better at reporting it. It's always been at the core ethos of Springfield to build good, efficient houses and treat people well and get on with the communities. So yes, we're now being able to communicate that much better now. So next slide. So just in summary, we've done a transformational business deal with Barratt, who we've dealt with before, and we judge as good partners, and we've had good relations with them. The focus is now going to be on the north of Scotland. We're going to use that cash to remove the debt and invest in the north of Scotland. We can continue to build a high quality product and house. And we believe strongly, and we're confident that we're well positioned to deliver shareholder value.
The majority of the questions are around the north of Scotland, so if we can just focus on that for the time being. How easy is it for you to buy land in the north of Scotland, and who from? I know you talked a little bit about it, but could you give us a little bit more detail, please?
Yeah, so we currently in the local plan, there are some 8,000 plots. We already have options and positions on land not included in that local plan. But clearly, when you're increasing and there's a demand to move to 24,000 houses, that's a lot of land. Now, our advantage is we have our finger on the pulse in the Highlands, and with the exception of 2 or 3, local house builders, we've got the firepower to deliver big infrastructure sites, which the smaller guys won't be able to do. We've got a track record of delivering, when you look at Nestside, when you look at Elgin South or in the north, track record of developing and delivering big sites. So we offer a genuine option to a landowner for something that will happen and can be delivered. The truth is that at this point in time, the bigger guys are not present in the area. They don't have the feet on the ground. They don't have the 30 to, well, in fact, Tullocks are having their 100th year anniversary this year. So they don't have 100 years of contacts that are built up over many years. It's mainly greenfield sites in the north. It's not a brownfield area. So we're very confident with our, with Sandy Adams' contacts. Our chairman knows a lot of people in the area. We know all of the land agents. We very good relations with the councils. We know the planning people by name, and we're present, and we're regularly. I mean, I've had a meeting with Highland Council probably twice a month over the last 6-7 months, trying to work out how. And we've met with Murray Council obviously as well, and Aberdeenshire Council, how we can make sure that we provide the housing for the projects coming in, and we all see it as really important. One of the important things when you're building houses is it's so much better to work with authorities that want to see development. That makes a huge difference, and we find Central Belt's tough. Obviously, the areas that we've, Perth and Dundee, very progressive, very very good areas where we'll continue with the villages there, but it's difficult to get planning. Is it the NPF4 new regulations as usual? Don't necessarily ease things up. I do think that there will be improvements made in that. That's why probably now is a good time to sell the land. Is it the peak? I don't know. I think it's pretty close to where the peak may be, but it's certainly, we will really, as I say, we've sold over 120 million of land at 1.2 times book value. Barratt are buying, a quarter of our land bank here for half of the value of the market cap. The numbers are there.
Do you have the necessary skill set up in the north of Scotland, and the supply chain, I guess, to kind of embark on the build?
Yeah, it's a bit of the network is getting built. There is going to be 5,000 people coming up. Yeah. Now, ideally, we want to get ahead of the game, and we want to be working in conjunction with the council, delivering the houses earlier, and realizing value on a very coordinated straight line basis. There will be other house builders who will kind of wait for the by osmosis just sell houses. We haven't really predicted any upturn in our private sales in the north, but I think there has to be an impact from an increase in private sales as well, but we haven't really put that in. Will there be issues with supply chain? Absolutely. If you're increasing, will there be house price inflation? Will there be wages inflation? Yes. There'll be a lot of impact on that side of things, and that's where the north of Scotland, maybe the ratio between house price salary to house price will increase over time. But we're as well positioned. I would say we're the strongest in the area, and we're well positioned to deliver on what's being asked. But there will be a lot of pressure on the area from, obviously, if these guys look for 5,000 jobs and 10,000 skilled jobs are coming up to work on freeports, and all of these jobs will need post workers and Tesco workers and the like as well. So it's a substantial boost to the area. Now I do believe there aren't many people who are as close to what's happening in the Highlands. I live in the Highlands. Sandy lives in the Highlands, and we know what is happening there and can see it very closely and up close and present. And I'm not, maybe me speaking and shouting about it here, maybe is raising other people's awareness. But I do believe that we can sort of deliver. Can you do the doubling of houses and get to the 24,000? That's like the 1.5 million question in England. Can you get there? Fortunately, I'm not a politician. I don't have to say, but I can say we'll try our damnedest to do as many as possible.
And you've obviously got the apprenticeship scheme, which you've always been quite strong on. I guess that'll help from a workforce perspective, will it?
Yeah, I mean, it's always been self-preservation there, that it's, you know, in Central Belt, it tends to be a subby model. We employ a lot more people in the north, because in Central Belt, you know, you've got a fluid workforce, you've got significant population. But in the north, if you're not training your guys, where are they coming from? If you're the main house builder in the area, which ourselves and Tullocks obviously are, then if you're not training them, who is? So we've always, you know, both of us, you know, Tullocks have, for example, they've got plumbers on the books, we've got scaffolders on our books. You know, we've got a lot of in-house skills, painters, plasterers, brickies, joiners, all on our books, our own kit factory, obviously. So yeah, it will take a hard work. It's not, nothing's going to be easy, but I'd much rather have the challenge of, we've got too many houses to build than we don't have enough houses to build, which has been the case for the last two years.
And in terms of the style of the houses, do you perceive that there'll be any difference? Will you have to design new house types for the north of Scotland, or is your existing kind of portfolio what you'll go with?
I think it's a good question, because I think for the rental market and for the entrepreneur market and PRS market, then I think you are looking at potentially 2-3 beds, say smaller properties, but they will still be the same vernacular and they're still built to the high quality that we build. Also, if they're falling back into affordable ownership at the end of 5 years, some of them will be, then they'll need to be built to the affordable standards. So yeah, we already have a new house type range coming through just now, which is what we were, you know, to comply with the 24, 25 regulations. So we're happy with our product, and we have you know, you tend to get a lot more single story and a half buildings, and you know, it tends to be slightly different vernacular houses when you get north of Scotland compared to Central Belt.
Okay. And what kind of impact do you think that'll have on your margins? Similar, increase, decrease, or too early to say at the moment?
I would expect, with a strong market and new people coming, new higher wages in the area, efficiencies, close locations to each other. If we're doing a lot of if we're building a lot of houses for joint ventures or for councils, and there's efficiencies in that build, you're not dealing with 100 customers, you're dealing with one customer, so you don't need, you know, the same sales and marketing, and you can build a lot more straightforward. So we should see efficiencies. We should see good margins, I would say. That is certainly what we would hope to see. It's a, you know, it is a challenge in the Central Belt. It's a fight to get the land. We know what we're selling the land at. It's difficult to get the land, and you know, it's a chase for customers. But if we've got a market where, you know, customers are waiting for houses and new people are coming into the area with higher wages, I think that's a good position and reason to be optimistic on margins.
Excellent, thank you. And just for those of us that don't really know too much about the master plan consent areas, can you maybe talk a little bit more about that and what the implications are for you?
Yeah, so basically what happened was 2 years ago, the Innermurray Firth local plan was being adopted, and it was for roughly about 8,000 houses, I think, were allocated. And Freeport had just been announced, and the local plan took no account of Freeport. So we, well, in fact, me personally, got together all of the heads of the ports and got all of the house builders in the area, got Chamber of Commerce, got the Prospect, all of these groups to basically sign a letter and send it to all the councillors, all of the MSPs, all of the MPs, and say, we've got a local plan coming in that is not capable to support the growth that is coming. And this will be damaging to the economy. And if we don't build more houses and get more allocations in there, then, you know, there's going to be pressure on housing, there's going to be pressure on rentals, it's going to affect tourism. And the council came back and the government came back and said, what we're going to be implementing, and it's now legislation, is master plan consent area zoning, so that if there's an economic reason and a justification for it, then the council can streamline planning outside of what is in the local plan and outside of NPF4 and streamline it through the process. So it follows a different process and a different fast tracking, if you like. So it means that if you're not on the local plan, and the idea was to use this master plan consent areas whilst the call for sites that's going on just now. So it was very, very quickly afterwards, the Highland, there was a conference in Aviemore last year, back end of last year, and there was a call for new sites. So there's another local plan going through, which is trying to get to the 24,000. I would assume if they've got a report that says they need 24,000, I would assume But the crazy thing is that if they need 24,000, they need to allocate about 30,000 or 34,000. I don't know what the number is, but you almost need to allocate more. So there's going to be plenty of opportunity for promoting through. And there's this stopgap legislation that can assist us through sites. And one of our sites in Nairn has been identified as a master plan, potential for a master plan consent area zoning.
Okay, thank you. And when should we start to expect to hear announcements coming through from you? What's the expected time scale or time frame when we should start to hear some news coming out?
Yeah, I would expect in the next 6 months to be making statements as to what's happening. I've had weekly meetings, weekly conversations with financial institutions, with banks, with Scottish National Investment Bank. We've had weekly meetings with them. And Highland Council, as I said, we're meeting them twice. We know the Murray Council potentially going down the housing association route. And we've spoken to the housing associations and the providers of mid-market rentals. And so there is already a lot of work gone into that. The key is we have sites. Other people have sites as well. I mean, there's plenty for a lot for all of us to go around. And we have promoted sites and they have got to the shortlist and we are, in pretty detailed discussion. So I'd expect over the next 6 months, certainly some announcements to be made. But this is, as I say, but meanwhile, if they're, and it's important to say, predicting something like this and, if you're forecasting something that's of this scale is clearly difficult. But because we're clearing the debt through the Barratt deal, then we're going to be in a strong position to do it. And we've still got significant, workload over the next 2 years in Central Belt and the North, regardless of this. But I would expect to see something feeding through quite soon.
Thank you. And a more general question, just about market conditions. You talked about the recent increase in buyer interest. Is that in a specific region or is that across all regions?
The North has been, just to separate, for this year, the North has been pretty solid throughout the year. The Central has been more subdued, the Central Belt. As I say, I think we're 2.5 years now and people have got used to the mortgage rates and the waiting for them to come down. We saw the inflation news today. Does that mean interest rates are going down? We saw wages inflation yesterday saying it's higher than inflation. That's probably good for house prices, but how does it all work out? And but there's a point where there's a housing crisis and there's a housing shortage, and there's certainly strong messages from Labour government and strong messages from SNP. They want more houses. The easiest way to solve the housing crisis is build more houses, and freeing up land is a good thing, which is what's happening in the North. Now, I think it will happen in the Central, but it's going to be a longer process. That's why I think selling the land that we've got just now is a good timing.
Yeah, thank you. And a general question regarding cash. Does the land sale make it more likely that dividends will increase or the policy will become more generous?
We have in our analyst projections, we expect to pay a dividend at year end. The key is getting rid of the debt and returning the business to profitability. And we believe the actions we're taking are really strong actions that will do both of those things. And obviously we want our shareholders to get dividends. They deserve a return for their investments. So that is certainly the intention.
Thank you. Well, that's all the questions. So unless there's anything you guys would like to add, I'd just like to thank you for your time. And I'm sure we'll all be watching with interest on the back of the fantastic Barratt land sale news.
Yeah, no, I appreciate everyone's interest and tuning in for this. So thank you very much, and we'll continue with our plan. And as usual, you can contact me direct if you've got anything you want to speak about. So thank you, everyone.
Very much.
Thank you, everyone.
We look forward to catching up with you again in September.
Okay, thank you very much.
Thank you. Cheers.
Thanks, guys.